Section 1. The Unprecedented Surge, a new era of AI investment. In the first half of 2025 alone, global venture funding for AI startups surpassed the total for all of 2023. Global AI startup funding 2022 to 2025, with a dramatic spike in early 2025. This is a striking and undeniable fact. The sheer volume of capital has accelerated at a pace that caught even seasoned market observers by surprise. Companies valued in the hundreds of millions just a year ago are now commanding valuations in the billions. This is not a subtle shift. It is a fundamental market realignment, driven by technological maturity, driven by commercial viability, driven by investor conviction. The change is reshaping the entire technology landscape. For founders, unprecedented funding enables faster scaling, more aggressive product development, and a major reallocation of resources toward intelligent systems. Section 2. By the numbers, charting the valuation explosion. The numbers behind the 2025 AI funding boom paint a clear picture of market euphoria. In the first 6 months, funding surged by over 70% versus the same period in 2024, reaching a record total. It was not just more deals, it was bigger deals. Several companies closed funding rounds exceeding $1 billion. An immediate impact on valuations created a new class of highly valued private companies. The most telling trend, the rapid leap from unicorn to decacorn, sometimes in a single round. Particularly evident in later stage rounds, Series C and beyond. Early stages remain active, but the valuation spikes cluster at growth stages. Growth is tied to tangible metrics, user adoption, rapid revenue, and a defensible technological edge. Investors scrutinize unit economics and customer acquisition costs, yet pay up for repeatable growth and a path to profitability. Section 3. The Vanguard, profiling 2025's AI unicorns. To understand the market, study the companies leading it. LumaMind, a developer platform helping SMBs add advanced AI with minimal coding, clear customers, and recurring revenue. A big 2025 round followed strong acquisition and retention metrics. Voice AI Labs builds hyper-realistic voice agents. Major telecom and call center contracts in late 2024 drove 2025 valuation strength. Enterprise-scale deployments created revenue and a defensible moat. Code Assist, an AI coding assistant with rapid Fortune 500 adoption, direct enterprise sales, and high-margin revenue. Green AI Energy optimizes factory energy. Pilots showed clear ROI, accelerating valuation growth. ShopSense AI powers recommendations for thousands of small retailers. Measurable sales lift proved value. Focus on specific problems, deliver measurable value, and build defensible business models. That is the playbook. Section 4. The Investor Mindset. Who is fueling the fire and why? Capital is coming from a diverse array of sources, each with distinct motivations. Venture capital, corporate VCs, hedge funds, private equity, and international investors. Corporate venture arms invest strategically and defensively for insights, acquisition targets, and talent. They outsource high-risk R&D while maintaining a foothold in innovation. Traditional VCs raised massive AI funds in 2023-2024 that capital must be deployed, intensifying competition and valuations. Competing for market-defining exits, they chase exponential growth. Late-stage players provide large checks pre-IPO, targeting proven traction and paths to leadership. Sovereign wealth and global institutions diversify into AI, adding competition and driving valuations higher. Corporates invest to transform operations. Founders with strong businesses command premium terms across a wider capital base. Section 5. The 3 pillars of growth. What is driving the high prices? 3 factors: genuine product market fit, improved tech and cheaper implementation, and investor FOMO. Winners moved beyond demos to solve high-value problems better than existing solutions, with paying customers and tangible revenue. More efficient models and falling cloud costs mean startups leverage open source and cloud to build faster and cheaper. The idea to revenue timeline shrinks. Scaling becomes more predictable. High-profile wins created strong FOMO, limited top-tier supply drives, competitive bidding, and rising valuations. Commercial traction, better and cheaper tech, and a capital-rich environment form a perfect storm for valuation growth. They reinforce each other. Better tech enables faster PMF, attracting more interest and capital for even faster growth. The market is rewarding teams executing on all three fronts. Investors are paying up, and that is driving prices higher. As basic AI becomes accessible, investors focus on durable moats. A repeatable acquisition engine, efficient digital marketing, strong inside sales, and product-led growth is immensely valuable. Strategic partnerships validate tech, add revenue, lend credibility, and open new markets. Proving enterprise scale de-risks go-to-market and signals readiness. Unique data enables models that excel at specific tasks, powering a data product user flywheel. More users, more data, better product, more users. But data brings responsibility. Privacy, ethics, and security are critical to avoid legal and reputational risk. Repeatable sales, key partnerships, and proprietary data form the most defensible businesses. The question is no longer just whether the AI works, but whether an enduring business can be built around it. Narrator. Despite enthusiasm, rapid valuation escalation carries undeniable risks. Narrator. Overvaluation can outpace fundamentals. If growth lags, down rounds loom, hurting morale, diluting holders, and hampering hiring. Narrator. A correction could expose companies valued on promise rather than performance, and competition is fierce. Narrator. Incumbents with resources, datasets, and talent can replicate features and distribute at scale. Narrator. Survival depends on faster innovation, superior niche execution, or moats giants cannot cross. Narrator. Evolving regulation on AI safety, data privacy, and algorithmic transparency adds uncertainty and cost. Narrator. Prudent investors probe revenue quality, churn, and unit economics. They add performance-based terms tied to revenue or product milestones. Narrator. They join boards, guide hiring and GTM, and reserve capital to support winners through volatility. Narrator. The goal, resilience through disciplined execution. For founders, abundant capital is both opportunity and challenge. The best teams focus relentlessly. One clear problem, one high-value use case, world-class solution. Depth before breadth, win a wedge, then expand. Identify the problem, build the solution, secure paying customers, track the right metrics, then raise to scale. Pilots and initial contracts validate the model. MRR, LTV, and churn provide the hard data to justify valuation. Expect scrutiny on sustainable growth, gross margins, and differentiation. Technical brilliance must pair with market mastery. Proactive safety, fairness, and regulatory strategy can become a competitive advantage. A hypothetical fast AI company X moved from demo and non-paying pilots in 2024 to 12 enterprise clients and 5x revenue by early 2025, then raised a premium round to build sales capacity and expand geography. Looking ahead 12 months, the frenetic pace of AI investment likely continues, with more discernment. Valuations remain high for companies with strong revenue and clear leadership. Billion-dollar rounds will persist. The market bifurcates. Efficient growers win. High-burn, unproven models struggle or face markdowns. Due diligence tilts to efficiency. CAC payback and net revenue retention rise in importance. Durable moats are rewarded. Data, integrations, and network effects. Expect more acquisitions as corporates buy innovation and talent, fueling the ecosystem. New laws will add costs, but reduce uncertainty. Firms investing in safety, transparency, and ethics will be best positioned. 2025's surge is a rational, if exuberant response to mature technology, clear revenue paths, and abundant capital. Those building sustainable businesses with real customers and moats will benefit most as AI becomes a fundamental layer of the global economy.